So now you've heard two views on playing it safe. First, Todd with his warning to be cautious, followed by Adam's balanced portfolio approach. It would be unfair of me to say that my next guest doesn't favor safety as well, but he also thrives on finding little-known small-cap stocks that are loaded with profit potential. Andrew Snyder is senior editor of Volume Spike Alert, a unique trading service that uncovers stocks likely return triple-digit gains by looking for upward ticks in volume due to insider buying. Now, one issue that Andrew has been keeping close tabs on is the current debate over raising the minimum wage by 40%. Since most of the recommendation Andrew makes in his Volume Spike Alert trading service are aimed at helping the little guy get rich, he supports a hike in minimum wage. Andrew, let's take a minute to talk about the history of minimum wage. Can you tell us how it came into existence?
Sure. It came into existence in the 30s in the Depression era. We had a lot of workers working for low wages, almost slave wages. We had a lot of children working for almost nothing, working long hours. And you had FDR in there fighting for the little guy, and he went to Congress and said, we need to set a minimum wage, we need to set some labor standards, and we need to get this done. But then on the other hand, the Supreme Court was saying, wait a minute, we can't have the government setting up a minimum wage. There's no way the government should be messing with the business. And so FDR made it through his first term without getting anything done. Then the second term, he had some clout, and he finally manhandled the Supreme Court into allowing his law to go through. So in 1939, we got our first minimum wage, and it was a quarter per hour.
Andrew, why not let businesses do what they know best how to do, and that's make money? If that means lower wages, then why not do that? Why even have a minimum wage?
Well, I think if a lot of economists had their way, and even a lot of politicians had their way, they would like to get rid of the minimum wage, but it would be political suicide to walk into Congress and say, let's get rid of it. You'd have people from all sides going against that. So we have to have the minimum wage there, and if we're going to have it, we can either keep it where it is or we can raise it. It's going to be an economic benefit to raise it, and I think a lot of people are starting to realize that. It'll be a net benefit to the economy if we raise it.
Well, I recently read that Nobel Prize laureates Kenneth Arrow, Clive Granger, and Robert Salow have signed a petition prepared by the Economic Policy Institute to raise the current minimum wage of $5.15 to $7.25 over the next several years. The wage should also be indexed to inflation. Is the issue here really about inflation, Andrew?
It all boils down to inflation in the end. It's about the purchasing power. The last time the minimum wage was raised was in 1997, and it's been stuck at $5.15 ever since that. And the purchasing power, that $5.15, has been eroded by 20% due to inflation. So people making that amount of money are down about 20%. And you have to remember that a lot of labor rates, union labor rates, are tied to the minimum wage. So as the minimum wage stays stagnant, those union labor rates stay the same as well.
Well, let me bring your attention to a research paper done in 1994 that was put together by economists David Card and Alan Kruger that focused on Pennsylvania and New Jersey. And what they found is that the employment in New Jersey fast food restaurants increased after the state increased the minimum wage. On the other hand, Pennsylvania's minimum wage remained unchanged, and employment in those fast food restaurants in that area decreased. Do you agree with their assessment of this?
That's a really good study, and it really changed the minds of a lot of economists. It opened up the doors to a different way of thinking. And while it doesn't prove that raising the minimum wage would be a huge negative side effect to the economy, it also doesn't show that it'll be the greatest thing. What it shows is that minimum wage at at low-end jobs, getting that minimum wage, people don't want it, but you raise it a bit and they start wanting those jobs. So employment actually rose.
So does the minimum wage then, by paying a higher minimum wage, give a little boost to the economy? And if that's the case, then how do investors boost their portfolios?
It's certainly a benefit to the economy. The more people you have working, the more money they're making, the better off the economy is going to be. Right now, corporate earnings are at all-time highs, and a lot of that money is going to CEOs making a lot of money. If you raise the minimum wage, it's not going to hurt the corporate earnings. It's just going to kind of transpose who's making what money. And the more money you can get in the hands of middle-class, lower-end consumers, the more the economy is going to boom.
Now, we know that you specialize in finding small cap stocks. So what companies are you recommending in light of the minimum wage situation?
I think the number one company out there that's going to take advantage of a raise in minimum wage would be Adecco. It's a smaller, there's a Swiss-based company that they do temporary workers. You go to them, they find you a temporary job, and the key to the way they make money is they charge a commission off of the hourly rate their workers get. So if that rate goes up, obviously their revenues are going to go up and their profits are going to go up, and they didn't have to spend a penny for it. The stock's at about $15.50 right now. It could easily go to $25 if we see a spike thanks to the minimum wage.
And so where could viewers find information about this recommendation?
You can go to volumespikealert.com, or of course you can go to taipanfinancialnews.com.
Now, Andrew, before we leave, I'd like to read a question from one of our Taipan Financial News subscribers. We love to hear from our viewers and always encourage their input as well as questions. Now, before I read the question, let me remind viewers that while you are restricted from giving personal advice to readers, your answer is intended for all viewers. The question comes from Curtis Lyman, Senior Managing Director of USF Advisor. Curtis writes, "Much is being written about major integrated oil companies being undervalued at the moment. Given their recent record earning levels and the need to reinvest those earnings, does it make sense to invest in E&P companies with proven reserves at lower relative costs on the basis that the integrated companies will acquire the E&P companies for the low price reverse, irrespective of the current volatility in the price of oil and gas?" Do you have a suggestion for viewers on the answer for this?
That's a good question, Sandy. I think a lot of people and a lot of investors are looking at the oil industry right now and wondering what is going on. With companies like Exxon spend as much as $20 billion each year on exploration and oil production, it makes you wonder, where's that money going? How can I take advantage of it? My answer would be, I don't think the oil industry is the big profit center we all think it is right now. A lot of people are missing out on some good profit opportunities in other industries while they're centering on the oil industry. Exxon's going to be spending money, but oil prices are going to be going down. So they're going to be looking for these companies after the prices go down now. Well, if you invest now while the oil prices are still fairly high, I think they're going to go down to 30. So if you invest now, you're going to be riding that landslide down. It's not going to be pretty. If you buy once oil bottoms out around 30, you'll be great. But right now, I think there's better industries to look at.
So at this time, it's better just to wait for when the price of oil drops down to, as you say, $30 a barrel.
Yeah, I don't think you'll have to wait that long.
Okay. Well, thanks for fielding that question for us, Andrew.
Not a problem.
I'd like to thank Curtis for sending us his question. I'd also like to thank you for watching Taipan Financial News. If you'd like more information on each of these topics, please go to taipanfinancialnews.com. You'll see links that will take you to each of these editors' section. Until next week, here's to great profits from smart investing.